ChatGPT. Live here in Dubai, I 103.8 FM on a Tuesday morning. Right, we saw a dollar drop against major currencies yesterday on the markets, but what's happening on currency markets today?
Currencies. Sponsored by insurancemarket.ae.
Yeah, well, the dollar, in fact, has regained a little, holding at a one-month high early this Tuesday morning. Traders weighing in a slim but lingering chance of a rate hike at the Federal Reserve's upcoming meeting, even as falling oil prices have eased some concerns over inflation.
What's the take stock? And we have a brand new index to do it with. The guys at First Class Property Management have put together their inaugural short-term rental index for the UAE. Louis Santos is co-founder and managing director of First Class Property Management. He joins us now. Louis, good morning.
Hi, Brandy. Good morning. How are you?
I am well. Tell me where the data for this index comes from before we look into what it tells us. Is it just the properties you manage, or do you have insight into other properties, other companies, wider data as well?
Yes. So actually, it's not only our portfolio. So we are managing around 600 properties. But from these properties, we also have view and we have access to data from the market. So one of our providers is the company that is working with us to do the pricing. And we have access to 40,000 listings data in the market. So all the ones that are listed in Airbnb. Plus, we also have we also took information from sources, official sources, governmental sources, and tourist data. So all these data together, basically we compiled, and we have, even in the report, we can always see, and it's clearly identified if it's the data regarding our report or if it's regarding the market.
Okay, so through that lens, what has Dubai's short-term holiday market seen in terms of occupancy in the last quarter, in Q2?
So the occupancy from the market has dropped a lot. So actually, just to be clear, this has been the last Q, so 3 months. We are talking about April, May, and June. And from these 3 months, the occupancy has dropped from 70% to around 40%, 45% for the market, okay? So actually, if we look at March, the drop is higher, but then there was a slight recovery from the market. When we look at our own portfolio, then the occupancy has grown much more, and we are around now 80, 90%, because we changed our business model in the meantime, and we are focused on monthly rentals.
Okay, we'll get into that in a second, but before we do, let's look at rates, which for the market are down by nearly half. You call that a repricing. How long do you expect those lower rates to stick around?
Yes, so, sorry, just to be clear, so the rates itself, it has dropped around 18%. However, the RevPAR has dropped around half. So the RevPAR is the result of the ADR, so average daily rate, combined with the occupancy. So if we multiply both the average daily rate by the occupancy, we have this unit which is very much used across all the hospitality, all the hotels as well, not only short-term rental, which is the RevPAR. And the RevPAR has dropped by around almost 50%. This is correct. Yes.
And presumably owners don't love that. You've got your pivot here from short-term rentals to, as you say, the monthly rentals. Tell me about what you have seen in the pickup for those monthly stays and who's taking them.
So the monthly stays has been mostly UAE residents. So also when we look at one of the information that we see in the report is who is booking, right? So who is booking at the moment. And we can see that it's completely different from the previous quarter. It's mostly UAE residents. That's the majority. So UAE residents are the majority of the bookers at the moment. And then there are also some other still, let's say, people from outside that are coming, but mostly in business. So they come for projects. They still book monthly. So they book 2 months, 3 months, even up to 6 months stays. Okay. And so it's either one or the other. So we have the majority is UAE residents, and they book. So what we see, there's a huge shift very quickly, moving from long-term rentals to looking for flexible stays due to the uncertainty of the situation. There was that shift. and also because there are so many available units that were available for the residents for booking on a monthly basis, that people want to use this flexibility, and they are in the hope of getting better rates.
Why are they renting monthly, though? Is it because they're between rental contracts, they don't know if they're staying or going, they're holding out for better deals? What are they telling you?
Yeah, so there are two reasons, the two main factors that we have been receiving feedback from our clients, from the guests. So the main one is actually was trying to get better deals and waiting for the long-term rents to come down. Okay, so after February, March, April, a lot of people were trying to renew their contracts, their long-term contracts, and what they were seeing is that the landlords were resisting to reducing the prices. Okay, and people are in the expectation to, because of the regional situation, to actually find a better deal. Okay, and so if the landlords are resisting, they look for alternatives, and what they find is this, let's say, midterm flexible solution where you can rent for a few months and wait for the market and see what's going to happen, and hopefully get lower long-term rents. So this is the main factor. But there are also people that are afraid of committing to a long-term contract because because of the uncertainty, right? So a lot of people are reconsidering or were reconsidering the last months their lives. They didn't know exactly how it was going to turn out, the situation. And because of that, they didn't want to commit to long-term contracts, right? So these were the two main factors.
We have to leave it there, unfortunately, but there's an awful lot of information in the report itself. Louis Santos, co-founder and managing director of First Class Property Management, thank you so much for joining us this morning.